Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, June the 6th. The year's 2022. Let's talk trading. Follow your plan with Walmal. As always, these videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, last night I was telling the traders that, there's a couple of questions that only they can answer. And the first question is, do they have a plan or a method? And number two, do they actually follow it to the letter?
Yeah, you're exactly right. They're the only people that can go and answer that question. And I think that's a legitimate thing to go and ask somebody who comes to you and says, "Hey, can you help me improve my trading?" And in a few situations where I've tried to help some people one-on-one, the very first question I ask is, "Do you have a trading plan?" And then if they say yes, I then say, "Do you follow it? Or do you just sort of, go out there and just wing it, and that's what gets us into trouble because, it's better to have a plan and it doesn't work than to have no plan at all because, and that may be a little bit of a controversial statement to make there, but I truly believe that it's better to have a plan that may not be working than to have no plan at all. Because when you have no plan at all, what's happening is you're just going in every direction. You have no idea what's working, what's not working. You have no idea, where to go in the next step. You have no idea how to go. And, when things go right, you don't know what to do. When things go wrong, you don't know what to do. It's got to add to all types of psychological craziness in your head and fear and, fear of missing out, fear, all types of those type of situations coming along. Whereas if you have a trading plan, even if your trading plan turns out that your trading plan is just not working, at least you know what you're doing and you got a starting point. Then you can go and sit down and say, okay, my plan isn't working. And you can go and have that legitimate conversation with yourself as to why isn't it working? Why isn't it, what's going on there that's not working? And you can sit there and start, analyzing your trades. I mean, one of the things I do on Friday afternoons, I stop trading usually on Fridays, usually somewhere around 9 o'clock in the morning, my time, and sometimes 10, depending on what the day is like. And I go back and I look at maybe not every one of my trades, but in the beginning, definitely every one of my trades. But I still go and spot check most of my trades. I look at them and say, okay, why did this not go right? Why didn't it happen? Was it because I wasn't following my plan? Was it because, hey, the market's changing? Is it because some unusual event happened in the world? And I also look at it not just for the ones that didn't work out, but I also look at it from the other perspective, the ones that did work out. Because sometimes, you got lucky. Here's a reality. My trading plan said to go long, and some type of news event that was unforeseen. In other words, it wasn't a published news event. Something happened somewhere out there in the world, and I wound up getting a nice trade because of somebody saying something or doing something, and I happen to be in the trade in the right direction. And so you can't go and count those ones. Oh, that's a great success. That's just pure luck, any way you look at it. And sure, there's an element of luck to trading anyway, but that's how I look at it. And that's, and that's why you need to go and have that plan. You need to follow it. You got to stick to it.
Yes, I would tend to agree. And, the thing about luck is, since trading is an endeavor that you don't control the outcome, every positive outcome or profitable outcome is luck.
Yeah, you're right. Every time you pull the trigger, there is an element of luck that sits out there. But here's the thing about having a plan. You know that, and you know that it's built into the system. So what do I have in my trading plan to go and help me out in that direction? Well, if I know that in this particular set of circumstances, that more times than not, it's going to go this direction, you can go and, I don't want to say, how do I want to say this? I want to say you can mitigate against bad things happening. And so it's the type of thing where that's why you got your stop losses. That's why you got, your emergency brakes, like what I like to call it. You got things out there to protect your account, and you have to go and put that out there. You have to figure that out, what they are. There's lots of traders have asked me, well, how do I do that? How do I, and here's the reality. And I think, this goes back to sort of what you said yesterday, and that is that you as the trader have to figure that out. I can't figure that out for you. I'm not, as they would say, I'm not your daddy. I can't do that for you. I can go and say, hey, you need to figure out what your risk appetite is. How much are you willing to lose? You need to go and figure out how many, whether that be in dollars, whether that be in pips, whether that be in any other measurable unit. But you need to figure that out. And not just necessarily figure out, some people say you never risk more than 2% on a trade in your account. And, and I'm going to go and disagree with that. And I'll cause some more controversy out there. And here's the reason why. There are people out there who can risk more than 2% on their account, and it does not affect them psychologically. And if they know that their trading plan has had a win rate, let's say of 60, 70%, they can go and take that chance and can do that, as long as they also know that their psychology will support it. There are other people that are out there, they can have the exact same trading plan, the exact same amount that they're willing to go and risk, but their psychology, on the other hand, they can't go and risk that much. They can only maybe risk, I'll go down as low as 0.25%. And because if they risk more than 0.25%, they get, they get white knuckled. They get very fearful. And then when you're white knuckled, you're no longer going and trading your trading plan. You're trading your emotion. And the next thing you know, you're not. The plan was built around going and certain events happening, and certain amounts going against you, and certain amounts going for you. And the next thing you know, you're not trading that plan anymore. You're just white knuckling it through.
Is that what happened to you?
Yep, it did. And, on several occasions where I finally had to go and say, hey, enough is enough. In fact, we were talking about this offline, the other day, whereas, with my account size, I am not trading. Before I was trading and risking, probably 3-4% of my account on every trade, and I was willing to go and do that, but it was very painful. In fact, if you remember our early conversations, TRO, it was sort of like, I'm looking for that method where it's not nearly as much a pain of being in the trade, because I was sitting there in pain every time that I would take a trade, and it was, my psychology didn't allow me to do that. So what did I do? Well, I stuck to it, made myself work my way through it until it got to the point where my account size got big enough. And now I'm risking on any particular trade. I don't risk more than 1%. I'm no longer risking that 3 or 4%, and I'm not going to risk more than 1%. As soon as I get to that 1% level, I'm gone. And it makes life, now trading is, it's a whole lot more relaxing. I don't want to say that in a caviar way, but the reality is, I just know that, hey, if it doesn't work against me, I've lost 1% of my account. It's not the end of the world. It's okay. I'm willing to go and lose up to 3% of my account on any particular day. And that I just go from there, and that's just that. And it's just so much easier to go and deal with life that way, for me, because I'm not in a situation of always wondering, okay, shoot, what's going to happen next? So I can't deal with this, because before, if I risked 3 or 4% and I took 3 or 4 trades in a row that were losers, next thing you know, I've lost 10% of my account, and now I'm saying, oh my gosh, the one thing that I say all the time, preserve capital, preserve capital, preserve capital. Well, I failed at that today, and then it affects you for the next day, because then you go into the next day, well, I got 10% less capital, and it's much harder to build capital than it is to maintain capital. Now what am I going to do? And you start playing those games, those head games, and you start all of a sudden doing some things that that may be contrary to your trading plan. For instance, you look at a trade and you say, I'm not going to take that trade. I'm afraid to take that trade. The next thing you know, you're kicking yourself in the pants because that would have been the winner for the day that made you a bunch of money. And, or on the other side, the other side of the coin, which you can very easily do, is I got to take this trade. I got to take it because if I don't take it, I got to make up that, that 10% that I lost the day before. I got to make that up. And you wind up taking trades that maybe you probably shouldn't have taken, and next thing you know, you got a bigger problem.
Yeah, I think you're right about that. Is that traders or people, they start to, I would say, get tunnel vision as opposed to looking at the big overall picture. And then that tunnel vision causes them to press. And then when they press, then they get stressed. And it's just a downward spiral from there.
Right. Yeah. And that can go and wind up taking you, into in a situation where you spiral down, 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 down. Hardly ever do you spiral up. It just doesn't seem. It's harder to go uphill than it is to go downhill. It seems in life. I think that's just an inevitable part of nature of the world. But it's so easy to get into that, and everything happens where this little things that don't even matter, all of a sudden you start looking at it from a negative perspective. You start saying, oh, this trading game is just it's nothing more than it's some type of scam. All the young people making money on this are the brokers. No young people making this are the big boys. It's completely rigged. And there probably is some of that where it's rigged, and there probably is some of that where definitely the brokers are making money. Hardly ever do you hear about a broker who goes out of business. But the reality is you can also go and sit there. It is a zero-sum game, but you can sit there, and if you sit there and play the game right, you can actually go and make money.
Yeah.
It's just that you need to trade your plan.
Yeah, because I could see somebody right now, say if they took that Walmal short at 50, they'd be all upset because, hey, it didn't work.
Right. And now we're right back to it. I didn't notice how far above it went. Let me just go check real quick. It'll take 2 seconds here.
Like 56, I think.
Let's see. The high on it was 51.4.
Yeah.
I'm looking at the short. So it went basically, by the time you pay commission and spread and everything, it'd probably been against you maybe 2%, 2 pips rather. And so that comes down to what's your game. If you're willing to go 3 pips, you would have been okay. If as soon as you went a pip against you and you're out, yeah, you're out. But guess what? You probably would have gone back in again. And now you could have, right now you could have actually made a half a pip or something. I don't know. Or if you stayed in, who knows? But I don't know. I don't want to go and put boundaries on people as to how they need to go and trade that. Personally, I would have stayed in the trade. If I took that short, I would have stayed in the short. I would have let it go against me probably 3 to 5 pips just because of the way it's moving. But, everybody's going to be a little bit different.
Yeah, I would say this is probably going to come down to about 45 because there's an inside bar. There's also, and let's see, high 46.4. So yeah, 46. There's an inside bar. There's imbalance. One of those things that, after you've had so many hours of screen time, you don't need the indicators. You just see it. And then you just have to wait and see if it plays out or not. I mean,
right, exactly. And that's what trading is.
Yeah, and if you look at the past 4 hours, we had 3 19s and a 29, and we're at 8 pips so far this hour. So, there's still room to move, but then again, it just might not. But I'll tell you one thing that is moving, and that's time, because the fastest 15 minutes in trading is up again. So, fellow traders, how about maybe in the comments, you let us know, 1, do you have a plan? 2, do you really follow it? Because it's not what you trade, it's how you trade it. So go out there and drain the banks. And this is the Rumpled One, over and out.